With the saturation of news between the US election and the pandemic, what tends to happen is certain news items seep through the cracks here. And one of them is regarding the IMF back in October saying that we might see a return to some sort of Bretton Woods. That was the call from their managing director, Kristalina Georgieva, back in October. And I want to talk about this today with my guest, Simon Dixon. He is the CEO and co-founder of the online investment platform banktothefuture.com. He also wrote a book 10 years ago with the same name, Bank to the Future, in which he predicted the crisis that we're experiencing now in 2020. He also has another prediction, which we will get to. But first, welcome to the show, Simon.
Hey, really excited to be here. Thanks for having me.
Well, I'm happy to have you. I mean, Max Kaiser has called you the best investment banker in Bitcoin. So I thought you'd be the perfect person to talk, obviously, Bitcoin, digital currency. But first, this message from the managing director of the IMF that we might see a new Bretton Woods. What do you make of it, and what would it look like?
So I think that we're leaning towards a central bank digital currency world. I first created a video in 2016 saying that central bank digital currencies would be used as a new mechanism to bail out bankrupt banks, and central banks would wage war on banks. And so the IMF recently made an announcement, and I created some commentary going through trying to translate what the IMF is saying into everyday language so people could understand it. But the IMF is calling for Bretton Woods 2, and it totally got drowned in the election and pandemic, as you said in the intro, because it's a really, really significant event. And that is that the IMF is, a very socialist organization that has tried on several occasions since 1944 to inflict a global currency on the world since John Maynard Keynes tried to introduce the Bancor, and we ended up with the US dollar debt-backed standard instead. The IMF is getting ready now that all central bank balance sheets are completely out of control. Governments are entering globally, we're in $250 trillion of global debt. I think that the next stage after this election, after this health crisis, is banks' balance sheets being exposed for what they actually are. And so the IMF is the perfect type of organization that would like to be involved in negotiating a new monetary system and putting their central bank digital currency at the center of that in order to really put forward what they tried to achieve with special drawing rights, but didn't quite get as far as they wanted to go.
Now, Simon, as we know, post-World War II, Bretton Woods was the big reset, right? But what does it look like in today's world? Is it backed by digital currency? Is it backed by gold? What does it represent?
Well, I don't think it's going to be backed by gold. I think it's going to be a repackaging of all this global debt and toxic assets. So really, we're in an over-leveraged economy, over-leveraged financial system, over-leveraged individuals max out on their credit cards and student loans and all sorts of other debts. Corporations that have been using the debt capital markets to push up the stock markets. And governments that are moving towards a modern monetary theory style economy where everything is funded by quantitative easing stimulus. Eventually, I believe that when the stimulus packages stop and helicopter money stops, then the true nature of people's individual balance sheets comes out. And the first place that hits is the real estate markets. And the real estate markets is really the mechanism by which private banks create digital currencies every time they issue a loan. And so if the banks haven't sold enough of those toxic assets to your pension, like they did before the last financial crisis, then it exposes the bank's balance sheet for what they are. And because banks are definitely too big to fail, and the impact of that deflation on the global world would be disastrous for all, then I believe that this time, rather than bail-ins and bail-outs, because of all the social unrest at the moment, it could be replaced with just simply letting the bank go bust. And rather than using some of these FDIC insurance schemes that only have approximately 1% of all the deposits it's insuring, or less than 1%, then you need a new form of money that will be injected into the economy. And a real simple way of doing that is just simply creating an app at the central bank. The central bank saying, everybody download this app, you'll get some helicopter money. And if the Chase Bank goes bust, then any deposit you had will be replaced with this new central bank digital currency. You're essentially replacing debt-based money that was created by a private bank with non-debt-based money created by a central bank, and you have a non-inflationary mechanism for deleveraging the economy. And then we're going to have currency wars globally, and the IMF wants to do that on a global scale.
Interesting. A different type of currency war, though, than one we've maybe spoken about in the past, Simon, no?
Yeah, I mean, this is a deleveraging. These are debt-free money. People just say, well, we already have digital currency. Almost 97% of all the money is, but that is all backed by debt. And it was created by a private bank every time a loan was issued or a mortgage was taken out. This is injecting. We've got precedent for this. It was done in the non-digital age during the American Civil War when the greenback was created in order to fund the Civil War. Essentially, the government just created this new money, injected it into the economy debt-free, rather than going through a central bank or a private bank. I think we'll get that with these central bank digital currencies.
So a lot of questions are coming to mind right now, Simon. So if, we have the ECB talking about an e-euro, we have the IMF papers, alluding to a digital currency. We see it in the Department of Justice in the US. How far away do you think we are from this reality? And what does it mean for our money in the bank right now?
It means I don't think depositors need to be scared of their deposits through bail-ins and bailouts, because this new mechanism exists for making sure that consumers don't lose their money. What we do need to be concerned about is the effect that money is going to have on our personal liberties, freedoms, and privacy in the future. Because I think in downloading this app with the central bank digital currency, you're going to have to opt into all those terms and conditions on the way into your free money and your deposit replacement, essentially. And those opt-ins are going to be, at least with private bank created money through fractional reserve banking, the money is one step removed from the government. This is a one step closer to the government. So you can imagine the policies that we'll have there. If you want to implement compulsory vaccinations, if you want to allow people to get on planes, then your central bank digital currency and the money will be connected to your passport. And you can have more and more draconian policies implemented, whereby, if we're on a Zoom call trying to do transaction, I'm in one country, you're in another, and maybe the servers in this call is routed through China, as Zoom calls were in the past, then there's three governments that might potentially try and take some tax out of that transaction. They can automate tax collection. The Bank of England just contacted all of the clearing banks and asked them, are you ready for negative interest rates? What effect will that have on your technology? And they've been working on their central bank digital currency for several years now.
And what does this say about anonymity, right? Like, I feel like we'd have to be giving away so much more information. And wasn't this at the heart of digital currencies?
Absolutely. So, this is where you get people ask, well, is that the end of Bitcoin, for example? Well, Bitcoin has a different use case. Bitcoin gives you the ability to own your own money, to spend your own money, and to have a monetary policy that is fixed and changed and can't change at all. With these central bank digital currencies, they won't have a blockchain. There won't be any transparency at the currency level in terms of accountability of the currency to the people. It will be the people giving everything to the currency. And so anonymity is gone. That went in 9/11 with the Patriot Act. It's always been moved towards non-privacy. When you deposit your money at a bank, the bank is the legal owner of that money. They can spend it as they choose, and they can use it as collateral to dilute the value of your money by creating new debt into the economy. So privacy is over in these currencies, but fortunately, this is where competition really comes in. And this is where currency wars actually become a utility for people, because countries are competing to all get, significance in this new monetary system. And so really, by having a currency like Bitcoin, in a sense, it can regulate the regulator. It can regulate the fiat money and create better fiat money, because people have an exit, and that gives more choice. And then people have to create, different forms of money come along.
Simon, I mentioned at the start that you had predicted in your book, written 10 years ago, Bank to the Future, a financial crisis in 2020, which was quite impressive that you had that clairvoyancy, I would say. Your new prediction is that central banks will now bypass banks and be going directly to us. How far away are we from that? And just tell us a little bit more about your forecast here.
Yeah, so for the last decades, I've been investing in financial technology companies because I believe that in terms of the fiat money, there's two trends that are happening here. There's financial system that's being built outside the financial system. That's Bitcoin. That's all the innovation that's happening there. Then you've got the traditional financial system. And I believe that because of the over leverage, the banks are just going to be taken out of the equation. They can come back and repackage themselves as financial technology companies. But I believe that in the future, the money supply is not going to be M0, M1, M2, and all these crazy complexities and central banks using, policies to try and stimulate how much money banks create through the debt markets. I think it's just going to be M. And that money supply is either going to create inflation and deflation. But it's going to be really simple for people to understand because it's going to be an API key created by the central bank. It's going to be algorithmic monetary policy. And financial technology companies are going to be able to build the technology on top of it and really replace the role of banking. The central bank doesn't want to deal with customer service, but it can release the technology for financial technology companies to actually build and all of the services that the traditional financial system has. The banks can play their role in that, but they will look very different to how they look today.
So Simon, I want to ask you, how are you preparing for this future that you're envisioning? And I mean, financially preparing. Are you 100% in Bitcoin?
I'm not 100% in Bitcoin, but I have what I call a retirement plan B, which is a plan for what happens if the financial system doesn't go. So really, I think people should be preparing for three things. In this monetary renegotiation, no one fully knows what's going to happen. It could cause runaway inflation, deflation, economic growth, or decline because it's just 100% politics. There's no market forces in here. This is what the politicians sat around the table will do. So I'm protecting myself in three ways. I have a traditional portfolio that is based upon the US dollar still being at the center of the world and doing that traditional way, prepare for different outcomes. I also have a gold-based portfolio, and I have a Bitcoin-based portfolio. Really, US dollar portfolio is things containing the status quo and being renegotiated into a non-privacy based system. Gold is if the dollar has a shift, then gold comes in. And Bitcoin has utility that gold doesn't have, which is, most people have to store it in Switzerland and Singapore, and the custodians can just shut down during lockdown. Bitcoin allows you to own your own money close to you, and you can send it digitally and globally. And so I think Bitcoin will perform, and it has done for 10 of the last 12 years, the highest performing asset class in history, 9 million% returns. But also, it's worth looking at other eventualities because at the end of the day, some politicians can decide to make it illegal in their countries like they did in gold in the past. But unfortunately, competing currencies will see that opportunity, and you need to be looking at different eventualities too.
And what a rally indeed. As we're speaking right now, Bitcoin, easily crossing over the 14,000 mark here. What's your forecast for Bitcoin? Let's talk within the next 5 years.
I've stayed away from price forecasts ever since I've been involved. I spoke at the very first Bitcoin conference in the world, and it's been a crazy ride. I've seen my $30 Bitcoin crash to $3 in one day. I've seen my $1,250 Bitcoin go down to $250. I've seen my $20,000 Bitcoin crash down to $3,000 in 1 month. I fully expect my $100,000 Bitcoin to crash to $30,000. But the trend is simply clear. The supply cannot be changed. And each and every year, people realize, and the government give people more and more reasons to want to own their own money, spend their own money, and have a monetary policy that cannot change. We're seeing real scarcity within the Bitcoin markets. And getting those Bitcoins at the moment, corporations and public companies are all trying to suck them up for their balance sheets to hedge against the dollar at the moment. So I think, it's really an asymmetric bet. Either Bitcoin is worth significantly more than it is right now, or it's worth nothing because there's some kind of bug or one of the risks that could be implemented into Bitcoin.
And Simon, I have seen you say that we could be experiencing asset price deflation and consumer price inflation. Would you say that's already here now?
Well, asset price deflation is being prevented by governments. If you look at the S&P 500 right now, it simply consists of 6 big tech companies that are benefiting from all of the lockdowns where no small business is allowed to operate, so everyone has to purchase from Amazon. Everyone needs new computers, so Microsoft and Apple are doing well, and everybody needs entertainment. So rather than the cinema, we're going to Netflix, and Facebook and Google is our mechanism for actually communicating and getting. Those 6 companies account for approximately 30% of the S&P, but behind that is 490 companies that are actually really dependent upon Federal Reserve stimulus. So really, the market, the asset price inflation that we're experiencing right now is simply inflation, which is why I believe that at the moment we don't really know, but we're probably moving to a Biden-led market because the markets and institutional investors now believe that free markets are not good for markets. Republican is not good. Lower tax is not good. Stimulus is good for markets. And so everything's a Federal Reserve-led market. But eventually, once those monetary renegotiations happen, I believe that we need massive corrections in asset prices because it's created this ginormous wealth inequality globally that needs to be reversed, and people need more affordable assets, not higher priced assets.
Okay, basically heading towards a banana republic, it sounds like, Simon.
Well, I do think that this is one of the most exciting times in financial history, and I do think that there are many tools available to us to actually move this in the direction it needs to go. So to me, it's not all doom and gloom, but as an individual, you really need to be on top of these things, which is why channels like this are so important, because everything's speculation now, and you have to speculate, otherwise someone's speculating for you.
Absolutely exciting, and it can be very lucrative and good for you if you happen to find yourself on the right side. I want to bring up another important news item that came out earlier this week regarding Bitcoin. I want to get your thoughts on it. A wallet possibly belonging to early dark net market Silk Road moved almost 1 billion worth of Bitcoin recently. This is according to the blockchain intelligence firm Elliptic. How significant is this news, Simon? Does it just make a good headline, or could it really have an influence on price?
It's certainly. So Bitcoin is one of the most manipulated asset classes out there. Money moves to these exchanges. I should disclose I'm a shareholder in many of the major exchanges in the crypto sector. But at the same time, the manipulation in the crypto markets is insane. But that only really affects you short term. The long-term fundamentals do not change and are not manipulated. So if this new supply that was locked up, really in Bitcoin, you have what's called the hodlers of last resort, which is the people that will just not sell Bitcoin no matter what. And so often what you see in the Bitcoin markets is some of these old addresses moving money towards an exchange in order to manipulate people to try and sell some of their Bitcoin. And then they just scoop up the Bitcoin because long term, it is scarce. There is only ever 21 million. And the utility of it goes up every year. So short term, certainly something you might be concerned about as a trader. Long-term fundamentals, I really don't care.
All right. Finally, Simon, are you buying anything right now? Would you be looking to add more Bitcoin to your allocation right now, or do you feel good with where you are?
I'm good with where I am, but at the moment, if I'm earning, for me, if I'm selling Bitcoin, the question is, what am I buying? Not whether I'm selling. So for me, I have set allocations that I put towards US dollar assets, set allocation to a gold portfolio, and set allocations towards Bitcoin. And I'm looking to increase those all the time, really.
So when you say gold portfolio, does that include mining stocks? Is it physical bullion? Is it ETFs?
For me, I look for the physical and I get exposure through the paper markets. But the vast majority of my wealth is in the retirement plan B, which is the Bitcoin plate.
Right. What about, do you like cryptos that are backed by either gold or silver?
Whenever you have, really it's just a way of bringing more people into the gold markets. It doesn't fundamentally achieve anything. It's just if more people can get into the gold markets through these products. But again, most of them are just paper gold anyway. So there's not enough physical gold to cover all this paper gold. So creating a crypto asset that's backed by some kind of paper asset and trying to mimic the price is interesting, but not really any game changing there.
Simon, I thoroughly enjoyed our conversation. Before I let you go, I appreciated how you took a positive spin, within this economic uncertainty we're living in. And I guess there always is a rainbow, and we can look for that silver lining. What are your thoughts to investors and viewers watching in terms of staying positive and staying the course during these times?
So I do think that this isn't the end of the financial system as we know it, and there are ways of hedging out. We got Bitcoin, we got gold, and we got the traditional markets and tools and mechanisms that policymakers can use to try and maintain some kind of sanity in this system. So I do think it's positive times ahead. My fear, though, is for those people that are really over leveraged into debt right now. And the young people, and this is why I got quite interested in crypto markets, is that it actually gave a tool and a financial product that those that were in, on that debt cycle, that were taking on their student credit cards, taking on their loans, suddenly they found a financial product that they were philosophically aligned to and started thinking about savings investing for the first time. So really, there's obviously investors will be all right. They'll figure it out. But I'm more concerned about those people that haven't even got on that stage yet. And so really, it's a really simple message. Spend less than you earn and invest the difference. And really, it's just really simple fundamentals. And people need to really be thinking about that, and especially in these times like today.
Very well said, Simon. I appreciate that. And I appreciate you taking the time to speak with me. Come back on the show. Simon Dixon, banktothefuture.com. Thank you so much.
Thanks, Vic.
And thank you for watching. We'll have much more for you on Stansberry Research. In the meantime, you can follow us on all our social media platforms, Twitter, Instagram, LinkedIn, and Facebook. We are all there. Thanks for watching. I'm Daniela Cambone.